Hello, everybody. We're currently online with Kim Ullman, CEO of Concordia Maritime, a leading product tanker and crude tanker company. Concordia today will be presented by Kim, and he will go through his slides now.
Okay, thank you very much. I hope everybody both hears me and see me. Thanks for the invitation. And after a turbulent year, this year, which has not in any ways finished, we again hope to be able to heave the anchor towards the end of the year and sail into much better markets. Now again, I'll get back to that. I will be focusing quite a bit on the market, tanker market as it is. Next slide. Okay. Just some key facts about Concordia Maritime, international tanker shipping company, 12 product tankers, 1 crude tanker, and we're part of the Stena Group. They own 52% of the shares, and we're part of their established pools and commercial operation. And we've been listed in Stockholm since 1984. Next page, please. Page number 3. Our business model is in a way simple. It is daily operation of tankers. You either go on the spot market or you're exposed to the spot market, or you can go on various contract forms, time charter or consecutive voyages. But the important thing is, of course, that you buy the right ships at the right time, and when the opportunity arises, you sell vessels as well. That's part of the business model. Next slide is slide number 4. Tanker industry. Where in the tanker industry are we? From crude oil to consumption. Well, you dig for crude oil out in the ocean and on land, and you transport that crude oil with big VLCCs and Suezmax tankers and Aframax tankers, so-called crude oil tankers. And you put it into a refinery and you make various products out of it, and then you transport those products with product tankers. And on the consumption side, you can see that still some 70% of the oil consumption is for transportation. Next slide, please. Slide 5 is just a picture of our fleet, the 10 PMAX product tankers and the 2 IMO2 class product tankers, and 1 crude oil tanker as of today. Next slide, slide 6, is just the first half in 2020. In short, it's been a strange year in spite of the fact that we've had corona effects. We have made profits, but for different reasons, and I'll come back to that in a while. So we made some nearly 60 million kronor first half, and we have total assets of 3.5 billion and NAV per share at 19.6 Swedish krona. Next slide, please, i.e. slide number 7. A few months ago, we were at Haymarket, and we were all there at the time, and that was in December last year, at this similar forum. And at that time, I did say that we were in the beginning of the next upturn in tanker shipping, and we had several factors to base that on robust oil demand and balanced inventories and fleet composition, etc., etc. And how did it look? Next page, sorry, page 10. Well, towards the end of the year, the market did shoot up, as we had predicted. Some of us thought it was going to happen a little bit earlier that year, but it did happen in Q4. For all those structural reasons I mentioned on the previous slide. So there were good reasons to believe that this was going to last. However, what we also showed back in December, you always have, even if you have robust arguments for a market going in a certain direction, there are geopolitics or there are unknowns, and we call them wild cards. And of course, page 12, page 13, well, we all know what happened in January, February. And what happened in January, February had a significant impact on consumption of oil. Basically overnight, for the first quarter at least, we the world lost 20-25% in oil consumption, just like that. Next slide, 15, is pointing to another diagram, which is the tanker market. And the tanker market, of course, in the first quarter was affected by the virus. However, in April, May, things started to shoot up very strongly. And that was not because of the COVID, that was because OPEC decided to flood the market with oil, and oil prices went from $70 to $20. And when prices go from $70 to $20, people start to stock up. And that's exactly what they did. People bought a lot of oil in spite of the fact they didn't really need it. But it was good for the tanker market for a short while. Then OPEC, came to the conclusion, we need to cut the production to be more in line with the consumption. And tanker rates fell off. Next slide, 16, is showing the synchronization between oil production and consumption. We know that the consumption went down, the blue line, but the red line shows that the production was kept up. And if you continue to produce all that oil and is not needed, you're going to put it up in stocks. And that is a stockpile we have now. But you can also see on the slide that the blue line is starting to go up again. So the consumption is coming back and have come back since May, June, July. And with the production cut from OPEC, we are now consuming more than we're producing. So we are drawing from the stocks, which is good. We need to be doing that to clear that overhang. But it hurts right now, but that's the way it is. So simply put, next slide, 17, when oil companies are stocking up, they need a lot of transportation and rates go up, and vice versa when it goes down. And they can draw from their own stocks, which is necessary, and that's what they are doing now, which is why the market is very low at the moment. Let's call it challenging. It's very low at the moment in third quarter and fourth quarter. We said it all along, this will have to be a natural response to that stock building earlier in the year. But we need to clear that, and we need to clear that overhang. And that takes us into our focus on the tanker market going into 2021, where obviously we're not any different to any other markets. Supply, demand, we need to put that on a scale. And on the demand side, you have lots of various variables that has an effect, of course, on your oil transportation need. You can see them all listed there. And on the right-hand side, I hope we're all on page 21 now, really. And on the supply side, on the right-hand side, we have to count all the number of ships that's being ordered and how big the scrapping pace is, and to just have a very good picture of what the supply is looking, because that is going to balance the demand side. Okay, next picture, 22. You can see the expectation of the worldwide economic growth. Certainly a big setback in 2020. This is IMF. This is what wishful thinking? I do not know, but this is IMF's figures that this will rebound during 2021 for all the good reasons that we all know. We expect, not only us, but I mean most of the analysts, not only have we started the upward trend on oil consumption in 2020, but we expect that to continue, and sometime during 2021 it will be back to pre-COVID-19 levels, which is good. So we're back on track. 2020 will be a lost year in a way, but we're back on track again next year. The right-hand side of the scale, as you saw, is the supply side. Ships. Are there many ships ordered? Well, not so many right now. We have an order book, which is new order compared to existing fleet, which is 6% of the fleet. in August. It has been a lot higher, as you can see, as the picture shows. It's been very much higher. So we are on a historical low when it comes to order book. Next, page 25 is, okay, showing the same thing, but just split out how much is the fleet growing year by year. And for the next year, with some expectations on scrapping, we expect the fleet to grow only a little over 2%. Next slide, 26, is of course you have to have a very humble approach to this, analyze as much as you can, but of course there's so many unknowns and you do not know what will happen. You have things that will, have a positive effect to the market and even accentuate the expectations that we have had or have today, but you also have the downside, of course. You have the biggest one, the second wave of COVID-19, of course. So, but when we put all this together and put it on the back on the same scale, we see a demand growth of 5 to 10%. And very many analysts we have had discussions with over the last 10 days are absolutely in the double-digit figure, because when things recoil and go back and kick back from very lows, then you have the psychological effects on this too. But we have a very steady growth of 5 to 10% against a supply side that is only, as we showed, growing by a couple of percent. Next page is 28, obviously, that shows our fleet. And this is trying to depict or describe the fact that we have a few contracts during next year, a few time charters, few other contracts. But other than that, 75% of the fleet is towards a spot market. We hope and we believe that that is the right mix as we speak right now, since we are believing in a much better market from next year onwards. We think this is an okay disposition of the fleet. So finishing off, why Concordia Maritime? Well, on the left, I changed page by the way, so I'm at 29 now. I hope everybody's on 29. Thank you. Market recovery process has started. I mean, it's not fake. The oil consumption has started to go up. But due to the high inventories, Q3 and Q4 will be tough. Well, not only will be, Q3, we're almost through with Q3 as we speak. So that is certainly a tough quarter. We've said it many times before too. And 2021, well, we definitely believe we're back on track and we can put 2020 behind us to a big degree. Concordia, well-functioning operation, right position vessel, small flexibility. We have access to a big sphere in the Stena shipping sphere. And the NAV we have talked about before. So we now again, in a way that we said in December last year, we had good reasons for doing that, but now again we said, well, this fall or this autumn, towards the end of the year and 2021, the restart of the next upturn in tanker shipping. That concludes the presentation. I'm not sure I'm within time or without time, but my presentation is finished anyways. Thank you.
Thank you very much, Kim. Very enlightening presentation. Just a few follow-up questions, if that's possible. Now that you're sort of entering this a bit more challenging period of the market because of the destocking, do you think that you will be going on more long-term time charters? Do you think that you will stay in the spot and sort of try to capitalize on an upturn in 21? What are your thoughts around this?
Well, the bad market has already started, and we've had it since July, and so you don't see too many charters out there. And follow the school book. If the spot market is low, the time charter market is probably low too. So it's not really an ideal time to do long-term time charters today. unless it's very specialized business with a premium being paid for specialized tonnage, and we can justify it from that point of view. Then we would do it. But other than that, not really. I almost would like to flip the coin and say that if there is anything we should be doing over the next 3-4 months, is maybe to add capacity, because we think it's a good opportunity to do that in this low on the market.
And since you're following up on that, are there any ideas you have now currently about creative fleet growth opportunities? What sector would that be in? And do you really think the pricing is great right now? Could it improve? And sort of what is the upside also in asset values, if I can throw in another question there?
Yeah, the prices on the second-hand market, I mean, did go up during 2019, when things started to look better. And have, of course, over the course of this year, gone down, whatever, 5-10%. I don't think that the prices will go down very much further. Is it a good time to buy? Yes, I think it's a good time to buy. On the prices, I think the prices are as good as they get in this low cycle. Do we have any specific plans? Let's call it that we do have plans and ambitions. And following this market very, very closely, and the fact that we've been talking about maybe moving to another stock exchange and things like that. All these things were put on hold during the worst part of the Corona, but it's a constant ambition we have. So we're looking into all sorts of things.
And you also said, I think, in our previous quarterly call that you would potentially consider new builds if there was long-term project-based conditions for that. Is that sort of the right way we should be thinking, or should we only focus on secondhand for you guys?
Oh, you're going to get one of these answers. It's a combination of both. Best of both worlds. And new builds, not really, because we do not like to add speculative capacity to the market. Full stop. If you do it against long-term charter, it is a different story. But long-term charter is not 5 years. It's got to be more than that in order to be called long-term. So it's a combination of both. And a new building you won't get in 18 months' time. So you really need something now as well if you want to add your capacity next year.
And since you're talking about the supply function of the fleet right now, the order book is quite low. So do you think, what are you thinking about your peers? Do you think they're going to order vessels, or do you think that a lot of them are holding back, trying to sort of preserve cash in a way?
I think they're holding back. I hope they're holding back, because we should all be holding back, and not read too much into a very nice figure, 6%, absolutely. But we have had exceptionally high times too. Sometimes I use the expression that, sure, the order book is historically low, but it has been times when it has been hysterically high too.
All right. Thank you very much, Kim. Hopefully everything goes well and you guys are also able to capitalize on these growth opportunities. Thank you for being with us today.
Sure. Thank you. Thank you all.